final company let's take a look at here is Amazon. And as I mentioned in the kind of early part of the show, is Amazon did agree to pay a $2.5 billion settlement to the FTC for allegations that the company duped users into paying for Prime memberships. And I just got to say, this just irked me. I'm like...
Duped you.
I mean...
Were you duped? Is that why it irked you?
I have an Amazon Prime membership. I knew exactly I was signing up for an Amazon Prime membership. I don't know how you get duped into one of those. Like, I will agree with the fact that sometimes these subscriptions are more challenging to cancel than they should be. And I think that is one thing that we should learn is that should be changed to make it easier to get out if you want to cancel. But when you sign up for these in many cases, I just can't believe that.
Well, that's, I mean, when you
the amount
buy
of duping was worth $2.5 billion.
Well, of that $2.5 billion, $1 billion was a civil penalty, so that's to the government, and then the other $1.5 billion is earmarked for the refunds to Prime customers.
You ready for this? Amazon will give $51 to eligible customers. So again, this is not necessarily going to be a great win for you if you did get duped into an Amazon Prime membership. Well, that covers like 4 months of your Prime fees, plus or minus.
Yep, yeah.
And I think the big reason Amazon ended up settling was, this blew me away. There was a couple members of its executive team that could have been held personally liable in this case. And I was like, oh my gosh. So I think they were like, we don't want to risk taking this to a jury and having them lose money. And then also, potentially the fee could have been even higher if it did go to a jury. And
I'm sure it would have been way higher.
Oh, absolutely.
If it went to a jury.
So anyways, we kind of look at that just as a fun story behind Amazon. Haven't looked at Amazon stock in a while. I know it's kind of languished compared to a lot of the Mag 7, just kind of jumping down here. The year-to-date return's actually about flat, just a 0.2% return. 1 year return's only 14.2%. This kind of, again, comes back down to how numbers work. The 3-year return, though, is 93.2%. If you would have bought after that huge upswing, you really haven't made much money since then. 5-year return, though, is actually not that great either, 45.6%. But looking at the valuations for Amazon, I was thinking maybe if things slow down, maybe those earnings would finally catch up, but that's not the case. Ticker symbol again for AMZN. But price to earnings 33.5, above the industry average at 31.8. Price to sales 3.5, industry average 2.8. Price to tangible book value 7.6. Industry average 48.5. Maybe there's a lot of consolidation and goodwill in the industry. But price to cash flow at 19.6, also high at 8 compared to the industry average at 18.9. Amazon's 19.6 again. You're getting decent growth here. Earnings growth over the last 1 year up 56.6%. Sales growth up 10.9%. We know a lot of people are shopping online that continue to benefit from that. I mean, I know I do. I spend most of my money on home supplies and everything at Amazon. It's just so easy now. But looking at the balance sheet, good balance sheet for Amazon here. Current ratio 1, debt to equity just 0.4. Looking at the 52-week range here, the low is $161.38, the high $242.52, and the current price $219.78. As I said, it's been essentially flat on the year. But going forward, we got to December 2026 to see estimated earnings per share here, $7.60. Gives us a target sell of $126.16. Trades at a forward PE still of close to 29 times. So Amazon still pricey. Definitely would rate it a hold based off the valuation.